Hey everybody, it's Josh Alexander from Orange County Housing Market News, your one-stop shop for all things Orange County real estate. So if you're thinking of buying or selling a home, this is a great place to start. The 10-year treasury just hit a 2-month high. So what does that mean for mortgage rates? Well, that's what this episode's all about. So let's go ahead and get into it. So today, the U.S. 10-year Treasury just spiked up to about 1.375%, which is about a 2-month high. Hasn't been this high since around mid-July. Now, you might be thinking this is a real estate show. Why are you talking about the 10-year Treasury? So if you're not familiar, the 10-year Treasury note is something that is probably the easiest indicator on where 30-year fixed mortgage rates are going. So they follow each other almost exactly in terms of their ups and downs. So if the 10-year Treasury goes up, typically you're going to start seeing interest rates go up for your mortgage as well. So it's something that I follow closely because it's a great indicator on what mortgage interest rates are about to do. So because that 10-year Treasury just spiked, there's a good chance, especially if it continues to go up next week, that we're going to start to see higher interest rates. Now, interest rates have been pretty much stuck for about 2 months now, right around the 2.77 to 2.87%, and they haven't really fluctuated much. So they've been pretty sticky right around that point, which is extremely low, so it's been great for home buyers to take advantage of. However, we are expecting those rates to go up, so anytime we start seeing any significant jump in the 10-year Treasury, that's a good indication that's about to happen. So if these rates continue to rise on the Treasury, we are going to start seeing those interest rates start to rise slightly. Now, I say slightly because we're not going to all of a sudden see 4% interest rates overnight. That's not going to happen anytime soon. However, I am expecting to start seeing interest rates creep up as we get towards the end of the year. As long as the economy continues to improve, you should start seeing that Treasury go up as well as interest rates. So this is probably the beginning of when you're going to start seeing interest rates slowly rise through the rest of the year. Now, just for some context, the last time we were above 3% interest rates, we had the U.S. Treasury sitting at about 1.5 to 1.6%. So currently it's at 1.375%. So we still have a little bit to go before we start seeing those 3% and above interest rates again. However, I can see that happening by the end of the year, especially if, again, we continue to see positive economic news on both the job front as well as consumer spending, as well as inflation. So if we start seeing everything continue to improve, you can expect those mortgage rates to continue to rise. So as usual, make sure you stay tuned to this channel, because if I start seeing spikes up or down on that 10-year Treasury, you'll be the first to know. So it's a great idea to make sure that you like, subscribe, and hit that bell button if you're watching this on YouTube. That way you're notified every time a new episode comes out, so you can stay up to date on what's going on in the housing market and what's going on specifically in the Orange County housing market. And that way you can make a better decision when it is time for you to buy or sell a home. So that's all I have for you today. Again, interest rates will start to rise as we go through the rest of the year, but don't expect anything crazy. We're looking at maybe 3.1, 3.2 by the end of the year at the most. So it's still going to be great rates for buyers to take advantage of, and it's going to keep us in a very hot seller's market all the way through the end of the year, even though demand and inventory is expected to decline over the next year. So until next time, stay healthy, stay happy.